The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. Hope you're having a good Tuesday morning. And we're going to take a look at the dollar really quick. I kind of scared myself out of this trade yesterday, just coming back into massive support here at 99.63, 99.99, that weekly daily situation. I didn't buy this, but I'm upset at myself for not doing so. But the thing you got to realize is we've reached some targets here. If you decided to play that bounce, which I was yesterday advising against, I still think we're not going to have a lot of follow through here off these weekly unfair highs. So as we look at this, I want to try to figure out what to do moving forward. So I'd still rather see a weekly close below that 99.60 and some change there. We have kind of done the bounce that we're supposed to do, I guess, off weekly unfair lot highs after coming down into it. I thought we had already done that before, but this is it in my book, 165. As you can see, we're just kind of trailing down here. It looks like we're possibly going to compress down into this area again, in my opinion. Any breaks and daily closes above 165 are going to change my feelings on that. We may have a new plateau we have to deal with there. But, I was looking at gold and quite a few other things, not really wanting to come off the highs. Gold has just come off a smidge here. Kind of got into resistance at the same time that dollar was on support. But I just thought that there was better edge to not play around with these particular things. I thought we were going to have a flush one way or the other on gold going higher and the dollar going lower. But that default action of gold in the dollar situation, not exactly that rosy as far as shorts go on gold. So putting things together, do I think the dollar is going to keep rallying? No, I don't. Do I think gold has a possibility of breaking through that 1236 area? Yes, I do. Let's take a look at the VIX. Actually, let's take a look at the S&Ps here. Okay, just checking it in for some comments there. All right, as we look at the S&Ps, spinning around up here above profiles again. Here's the 240s. Talked about a little bit of a trade yesterday, but now rallying back up into that 2294 area. Don't see a huge edge in just laying into the shorts here. I've still got some puts on myself, and I'm starting to get a little concerned about those just evaporating here. Testing my nerve. A lot of things pointing technically, and I'm going to go into the scanner here. That's why I was trying to trade this with options, because I didn't feel like we were going to be like an easy dump. But as we look at this, the breakouts happening on the S&Ps. Let me go back to this. The breakouts happening as of yesterday's close. There's what? This is 5 breakdowns, quite a few actually. And here's the situation on downtrend reversals. There's the amount of stocks doing that number. Here's uptrends reversals heading down. Let's take a look at the breadth figures before we start talking about the S&Ps further. Here's the numbers here. Pretty balanced marketplace. Not a big gap up this morning. Here's the weekly numbers. There's the daily. Wow, is that right? Daily? Okay, there we go. A little bit more imbalance towards the upside on the ultra long-term weekly, but how do you trade this now? Here's the 60-minute crossovers. It's going to be tough to sell this again at 22.94. We may move a little bit higher. Again, I think the way to trade this is probably with some option hedges if you're going to get into the short side of this marketplace. But right now, it just, we talked about yesterday, this is kind of a scary situation. The targets down below were 22.79. That didn't even get hit. Now we're back up to the highs again. So we got to take that for what it's worth. Got to be able to kind of be nimble as traders. And if you look at the weekly here, this is just looking like it wants to do another spike, actually. So I'm a little concerned about the puts I got on. Let's take a look at the Shanghai. Take a look across the globe really quick. We came off the weekly POC here. We talked about that was the first term targets, but I think actually this thing's going to go higher. How do you trade this? Here's the daily. I think you just trade breakouts again above 33.80. You got to look at some of those China A shares ETFs to trade this in the U.S. Let's take a look at the 30-year. See zero edge and even messing around with this right now. Here's the 30-year on the daily. Might be time to look at an option strangle on this product, but I think we're just going to spin around here and not break out anytime soon. So you might want to wait on that. Let's take a look at the silver situation. Again, the dollar coming up a little bit, coming into resistance. It looks to me that these golds and silvers want to move up, even though we're at major resistance on both of these products. It just feels like they just want to be spring loaded to move a little bit higher, and that dollar kind of going back up and rallying back up into that kind of area right there. We could come off, kind of relax back into that 99.63, I believe it was 99.63. So be prepared for gold and silver to move a little bit higher here. Taking a look at crude. Crude's just, again, it's nice that it's spinning around above 52.32 still. Still looking at this to try to buy support every time it's offered. So you've got 52.24, 52.32 sitting down here on the March contract. That's good news. You got another trading opportunity from the long side. I'm not interested in shorting this, even though the past couple of days we kind of went into that 54.46. I'm blocking out the short side on the crude trade. And let's hit a couple of currencies before the first break. We're going to get some stocks on the board. British pound. Here's the drill here. You pretty much had that key reversal outside the box back in. Very, very damning for the longs on this product now. Here's the daily. First targets down below are going to be 122.96. Let's just call it 123. I think we can still go lower on this. The Aussie dollar, they pretty much have come out with some statements we're going to talk about as far as rates go. And we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Taking a look at uptrend reversals. This is something, the stock market kind of gradually going higher and some stocks just starting to change tone. This is a good sort to look at in the scanner. I'm looking at AN. I was looking at these last night. These are kind of based on weekly and daily setups and still holding pre-market because the data feed that we're using doesn't populate the daily and the weekly pre-market. Got to wait for a new bar to appear here. The 60-minute and 240 are obviously in force here, but AutoNation, AN. So it's going to tell you when these happen the first day or even the second day on these reversals, the way we've got them set. And we've also got some 240 information factored into this. But had a breakdown on this one. And these are stocks that were in a defined uptrend relative to profiles. Here's the weekly. Here's the daily. Got the breakdown. Here's the weekly. Remember, we kind of use longer term time frames as precedence over shorter term time frames. And the good news is about automation is, we've come down into this pretty serious after taking a good dump. Did I say that? 47.86. Speaking of super colon blow, after AutoNation took a serious dump here, 47.86. You got a really good situation here, in my opinion. You've got a decent support situation, and you've got a risk reward scenario that's probably really decent here. So what is that risk reward scenario? Stops below 47.86, and you've got some upside here to kind of retrace back up into where it broke down. So you've got a little trading opportunity. This stock, not the normal household day trading market timing product in the S&Ps, but a decent little situation there. Let's take a look at CHRW. So here's the kind of breaking down below here. I like how this is acting relative to the market right now. And I think we could have some more downside on this one. 75.28, you can orient stops below there. Remember, we kind of took a dump below, came back and rallied up. That's going to be our keyword today, dump. And I think you got a chance to short this here. And the good news is you got place to place stops, or place orient stops, and you got 71.73 as targets on this trade. Now, I know these aren't massive moves we're talking about. These are just, hey, the risk reward's there, trading opportunity for guys who want to, get their toe in the water, put a couple hundred shares on something and see how this operates. Dollar Tree. Here's the weekly. Again, kind of got a bounce here. Now this would have been on some other sorts that we had last week. There's not a lot of risk reward here. I'm just looking at, we're breaking down again, but again, you've got massive support at around 73.45. So I'd pass on this one. Ecolab. Let's see. Ecolab. Not the weakest stock in the world, but something that might be pretty cool to trade here. Again, 120.10 stops above there. I like how it's kind of just not wanting to move up with the market here, and you could have some decent downside moves here. 114.08. This is kind of reminiscent of Johnson & Johnson, that kind of setup that we had on that one. General Mills. Yeah, not a lot of big risk reward there. Let's move on. HP. Yeah, this one. Let's see, where is that? 73.09, 74.13. Got decent resistance, 73.74 on this one, and obviously not enjoying anything related to the market moving up. And this is what this is a stock. If the market does happen to pull back, the theory is things on their lows are going to fall faster, or things that have already kind of started showing relative weakness. This is a nice little pick here. Orient some stops above these daily unfair lows, weekly unfair highs. Again, here's the weekly situation. We dived back in the box. A lot of times these boxes will completely be explored. So I like this one probably more than anything else we've looked at in the last 10 minutes. HP, and that is a stock in the XLE, and obviously not participating with crude spinning around here above those weekly unfair highs, above 52.32. Was it Humana? Yeah, I don't know about this. This one's not as attractive, but without question, not cooperating with the S&Ps. International Paper. Here we are. So talked about this one, I think yesterday, the day before. 51.40. Now you got the supreme support situation on the weekly there. Even though we're breaking down the daily, you got to kind of look at some other time frames there. I like this trade on the bounce. VNO. Let's see here. This one's scarier trade, but the good news is on this one, you got a profile up here above price action yesterday. This one might be a decent little short here. Okay, here we go. Conversely, downtrend reversals. These are stocks that were breaking out yesterday relative to profiles. Cardinal Health, and that's pretty decent right there. Ooh. CAH. Equifax. This is a decent little long here, starting to show some strength, and again has a profile appearing below price action. Nice little situation here on Equifax. St. Jude Medical. Gonna pass on that. VRSK. ALLE, let's take a look at that one. XLI stock, kind of market dependent there, not an anomaly going on, so I don't know about that one either. All right, let's go back into our futures section here. Let's take a look at one thing I wanted to look at. Let's take a look at copper, March copper. All right, so had an email about this one. Not a lot of direction here. I mean, I'd love to see this thing fall a little bit more into 2.5966 on copper. Here's the weekly on copper, kind of right smack dab in the middle, but you got decent support and a chance to pick a battle around 2.5966 on that particular product. Let's take a look at the VIX. The bane of my existence here. Man, unbelievable. All right, so the VIX is just continuing to trail down here below weekly and for lows of 1162. Man, I would love to get a weekly close above 1162, but I don't know if we're going to have that. This market may do another run up before it comes down. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, a couple of stocks in the news here. VMC. Oh, I'm sorry, that's not in the news maybe. Earnings this morning. Okay, cool. All right, so VMC, this may be a little delayed here. 124, that general area looks like where it's trading at right now. So this is a weekly bar not showing that pre-market print here, and neither is the daily. We traded, it looks like, as low as 121.50. So that's way down here. Hold on. Trading 124 now. So, I guess the question is do you try to pick this thing up here? I don't think so. I'm not a big fan of trading these types of scenarios. You could just have, and I don't know how liquid this thing is, but this is the type of thing you could have a bunch of people mass exiting the thing on the opening, fund managers, what have you, or you could have a rally. I mean, you just don't have anything to really base trades on here, and you're actually below daily unfair lows, kind of where it's settling right now as we're talking, it looks like. So 124 is down here. I think it's probably much better on situations like this to just let the thing do what it's going to do today and see where at the end of the day the consensus bid offer situation is, and then then you've got kind of a stake in the ground to kind of focus on. I'm the guy who sells the low print and buys the high print on situations like this. So I've learned to stay away from them, if that makes sense, Terry. Coca-Cola, I'm still super bearish on this one. Just looking for any reason in the world to short this. Risk reward scenario right now, putting on a trade today, it's probably not the best in the world. We're smack dab in the middle of a profile, but something seems like the other shoe's going to kind of drop on this one. So just I wouldn't be a investor grade type guy on Coca-Cola. McDonald's, let me make sure we got the right time frame here. Boom. Yeah, so closed last week above. We're just kind of spinning around, making new highs on McDonald's. The train could leave as far as the longs are concerned. With the market possibly moving higher in general. This is obviously one that's kind of beat it a little bit and made new highs recently. 124 support on it. Not a huge fan of McDonald's, but you can't really short this right now at all. So you got to, and we've had a pretty good run here. I'd rather wait, and I had an email about this. I'd rather wait and see on this one. If we can get a weekly close reversal back below 124, it'd be great to look at as, all right, we want to explore more of this fair auction below, and at the same time look at the dailies and see if we have a new supply happening up top. And that's just not in order yet. So it's kind of a pass in my book. A couple other stocks. 20th, First Century Fox. All right, so this is kind of interesting. I definitely wouldn't be going long here. This is an indication that we're probably going to have a new profile appearing on the long-term weekly, and then you might get some more pullback into the bottom of the box if this continues as a new box appears. So here's the daily. I think 3054 might be something to look at, but on the long side, but you've got to just kind of wait because you've got this indication that you're supposed to wait right now. But if you've been long it, you definitely should be getting out of some of it at this stage. And it looks like we're printing 3080 this morning, so we're down in here. I don't know if I'd be picking this up. Hasbro. All right, so my God, is that real? Ooh. All right, so what do you do with this type of situation? Actually, you gotta wait. There's nothing to hang on to either way on Hasbro. Let's take a look at Tyson Foods. I think George Costanza got a job there temporarily one time. Here we go. 62.38. So that's big support on this. We're at 62.90 right now. So big move down, kind of key reversal looking situation, but you're on support. I don't mind looking at this from the long side here. 62.38 stops below. All right, let's go back and look at Japan for a second. Let's take a look at the yen before we look at this. Here's the Nikkei right now. So coming back into support, 18,893. But let's take a look at the Japanese currency. Here we go. Oh man, this is supposed to be a default back to truck up buy here. 111.67.68. We reached a low today of 111.59. We're getting a little bit of a bounce off of that. The dollar is helping that situation a little bit by bouncing, but it's tough for me to pull the trigger. I'm not so sure about the dollar here, even though you might have a little bit more follow through. You've got a decent support. Remember on the yen, we talked about this forever being the back to truck up area. You've got a trading opportunity here. The dollar closing above that 10, what was it? 10, closing above 165 is going to change everything, and that yen trade may actually get some legs based on that. Let's take a look at the euro. Kind of in a support DMZ down here between the daily for highs and weekly for lows. That wouldn't be exactly great for the dollar either, so that's why I'm staying away from that. The Australian dollar, kind of going to say that they're just proclaiming that rates are going to stay the same for a while. That's obviously not good for the currency. But I think 75.94 is going to be decent support on the Australian dollar. So you just got to wait a little bit longer here. We're trading about 30, 40 pips above that right now. All right, let's look at a couple more stocks here. Apple. God, continue. Ugh. Yep. So there was nothing up here, no new information, no indications. Here's the 240s. Be tough to get long or short this right now. Extremely difficult to get short. There's no way to play defense on this right now. Let's take a look at Amazon after that earnings pullback. So day before yesterday, we reversed back above. This situation here is still not out of the noise level. Pre-market, we're trading about 808.80, so kind of hovering around that area. We'll talk about this a little bit more when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. So one of my favorite sorts when the market is going up is to try to find things that are just kind of reaching the Custer's last stance on the short side. Good levels, risk reward scenarios. So Bank of New York Mellon, obviously a XLF stock. Here's the daily on BK, and here's the weekly. This is kind of cool. You got really good chances to play defense above this 46.14, which coincides to some degree with the 45.57. So you got a nice little DMZ here on BK. I like how this thing broke down, come back to resistance. Decent little trading opportunity there on the short side. If you're looking for stocks to short, that might be a little easier than shorting the S&Ps right now, as I've proven. F5 Networks, this is a pretty cool one right here. An XLK stock. Here's the daily, here's the weekly. So that same premise, breakdown, technical damage on the long term, you're rallying back up into the top of the box on the daily. This might be another little decent opportunity. Even though we've kind of showed some strength the past couple of days, add an area where you can whack-a-mole there. Garmin. There's the daily. There's the weekly. Yeah, I don't know about this one. Lockheed Martin. This one looks pretty interesting. Here's the weekly. Just kind of hovering below here. I mean, you know, this is kind of compressing up into this area. So to me, it looks like we could get a pop. So even though we're kind of at the top of the profile on the daily here, I kind of would be wary on this one. But now we've got, if anybody can say this properly, please raise your hand. Malik Rocks. MNK. This one looks pretty cool. So here's the weekly. I really like this one, actually. Here's the weekly. There's the setup there. There's the daily. Well, let me see if I can get that chart to look right here. Okay, there we go. Kind of regulating it down. Your below profiles on the weekly. MNK. Malik Rocked is the name of the stock. MNK for short. All right, a couple other stocks we want to look at, earnings related. Let me take a wild guess at looking at, let's see, KORS, Michael Kors. It's out, and it's bad, as we probably could have expected. 36 and lower. You know, here's the stock. I mean, we were trading 41 before this. Now we're down here. These are the type of scenarios I've been trying to pick out on the scanner for you. Stocks that just aren't really looking that healthy as the market's kind of moving up here. And I have no idea how this stock was even as high as it was, fundamentally speaking. at 41, but now we're down here. So again, this is kind of, I'm not trying to be a Monday morning quarterback here, just showing you the premise of some of the things that we try to use. We're trying to find these anomalies as the market's kind of clarifying some stocks being pieces of crap. This was one of them. You don't know what's going to happen with these earnings, but man, this is a weekly situation. So the past couple, past couple of months, this thing's just been migrating, and then took a dump, and now it's taken a huge dump, and this stock would therefore not need super colon blow. Here we go. Let's take a look at GILD. Oh, is someone on the? Have we got Victor on the phone with us? I thought we had a caller, not on the phone. Okay. Said he's listening. BP. Okay, sorry about that. British Petroleum. Okay, Gilead. Let's hit Gilead. Let's do BP. Here we go. BP PLC. Excuse me. All right. So 34.70 looks like pre-market. That's where we're at. So we're down, not significantly, but again, this is one of those stocks that had kind of clean and cleared weekly profiles. Let's take a look at this in the scanner here. BP. It's not in the scanner. All right. Okay, so I guess the question is, what do you do with it now? So it's trading below 35. That's the weekly. This is the dailies. And again, this is a stock that's just not really wanting to look rosy here. And do you try to pick this up on sale? Okay, Victor, are you there?
Yeah, how you doing? I got two of them. That BP, the 34.58 is a 200-day moving average, and it looks like it's going to blow through it on BP, and it pays a good dividend, 60 cents a quarter.
Yeah, this one.
Should I touch it or wait?
Technically, I just think you got better things to look at from the long side. I mean, the risk here is if the market does turn around, these stocks that are weak are just going to probably going to continue to move lower. And if the market moves higher, which it looks like it wants to right now, and you keep your eye on this and just wait, and it just doesn't want to seem to get out of its own way, then I think you've actually got another short on your hands. I mean, this is a little concerning. I mean, they don't give free lunches in the market, so it's not like everybody and their brothers not looking at the same, like 200-day moving average, and then the market's just going to give you this free trade here. I just think you got better things to look at on the long side than this situation. I mean, it's already, yeah, go ahead.
No question. Overseas, it trades under a different symbol. It was only down like 2%. It was down less than it is here. Does currency have something to do with it or not?
Well, I'm not exactly too familiar with the internals of this company right now, but some people.
It's a Rockefeller company. It used to be owned by him. You know what I mean?
Yeah, but I mean, it's not like when you see that 2% thing that you saw overseas. I mean, this is where the market is right now. I mean, there's,
okay. So it's 3 days of downtrend at least, I would say, right? Can it hit 27 again? You think?
Well, I tell you what. I tell you what. The good news is if we have. Are you in the den sometimes, or are you?
No, I'm not.
Okay. I'll tell you what, I'm going to put it on a list to look at and in the next couple of days. And I'll tell you, the strongest way to look at this from a long side is if we start getting some new information on the weeklies or dailies for some form of a turnaround, like a new demand area that will be appearing. And then it might be okay to start looking at it. But right now, this morning, it just doesn't.
Hey, quick, can you check out one more? It's a GGB. It's a metal company. Yeah. I'm hoping that we go to war, man. I'll drive the oil price. You know what I mean?
Well,
check GGB when you get back.
We will. We'll take a look at it. We'll hope we don't go to war and it still goes up. But
no, let's pray for the good war. Good war. We need it.
We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, let's do a wrap here. Sorry, I forgot the symbol name for the guy who wanted us to go to war. We're gonna just kind of maybe I forgot the symbol. God, my fault. S&Ps. All right, just to do a wrap here, man. Not looking shortish here. I will admit this. Do have a 240 on for high at 2294. You've got something below at 2279.90, but not looking that short-minded this morning. Here's oil coming down a little bit farther here. You know, Turner rent's the same way. Still looks like a long here around 52.32 to me. But that dollar situation, if we do come off, and we had a little bit of a bounce here off those weekly unfair highs, we had talked about that being a possibility, but I passed on that trade. But we're kind of coming up into resistance again, 165. The euro's looking a little supportive here. So what does that all mean to oil? If we have a little bit of a relaxing situation in the dollar, oil could move up a little bit. Got to keep your eye on both of those products. Gold, the same situation, sitting at weekly unfair highs. Oh man, I messed my screen up here. Hold on. I have no idea how to get that off. All right, so All right, so we're going to leave that up there. So here's gold. 1236 are those weekly unfair highs. Not so excited about being short this, even though we are kind of on the daily coming off a little bit here. Got to look to the dollar on that one too. VIX, we talked about that. Talked about the Nikkei, looking a little supportive there. Talked about silver being in the same boat as gold. Not looking to really short it, just kind of a wait and see. Targets have been reached on the long side, I will admit that. Let's take a look at the XLE. Sorry. The XLE, has broken down a little bit below weekly unfair highs here on the XLE. This is the daily situation. And we're going to take a look at some XLE stocks really quick of note. And here we are. The seller dweller as far as breadth calculations go. There are some green shoots here. Chevron, CVX. Let's take a look at this one. Nice little situation on the weekly there, 112.30. Could get a little pop off that inflection point. Let's see here. Trans rig. Let's take a look at this one. Yeah. 1361. Played defense below there. A couple others. Let's see I'm just looking across the grid, looking at some of our arrows, numbers, and colors here. Let's take a look at Chesapeake. Might have a little bit of chance for a trading opportunity down here at 6.36, stops below there on the long side. Apache. A lot of these oil stocks are kind of sitting around support right now. All right, guys, stay tuned for Larry and all the hosts on TFNN all day. We'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.